Hey, welcome to Dallas Stock Talk, where I talk about topics relating to investing and finance. But more specifically, the stock market. Now, in this video, I'll be going over what is value investing and what are some things you need to look for when you're investing in value stocks. But before we get started, make sure you smash the like button because it helps the YouTube algorithm, quality content, and help my videos reach a broader audience. But before I get into the topic, if you're a big fan of finance and investing, make sure you check out my store, Wall Street Stock Apparel, where I make custom investing and finance t-shirts. Okay, so before I jump into what to look for in value stocks, I think it's good to go over what is value investing and what is value stocks. So value investing is pretty much when you're looking for stocks that are undervalued or cheap. And when I say cheap, I'm not necessarily talking about the stock price. I'm talking about relative to the business productivity. You can kind of think about it as buying stuff at a discount, whether you only buy things on sale, like on Black Friday, nice quality things. That's kind of like that, but in the stock market. So that's what you can kind of think about when you're talking about looking for value stocks. Nice quality businesses at a really relatively low price compared to the productivity. Some of the most popular value investors are like Warren Buffett, Benjamin Graham. So those are the people who were probably one of the best to do it. I even got one of the shirts that about Warren Buffett. Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. So I definitely just thought I would give him credit before I kind of jump into it. But before I get into all the financials and screeners and stuff, the metrics that you can look for, there's kind of like 3 important things that you definitely want to know when you're value investing. So when you're investing, when you're a value investor, when you're looking for value stocks, you want to definitely take the approach of if you're buying a business. So the way I like to think about it is if you're buying the whole business, what will be the mentality that you're taking? Because when you're buying a stock, you're buying ownership. So if you kind of take it from the mindset of you're owning the own business and you plan on holding it for a while or having your business for a while, your approach of how you would look at the stock market would be drastically different, because the whole idea if you had your business would be to keep it for a long time, not to be kind of keep trading it in and out. So I think this is kind of really good for new investors to understand, because a lot of times with the stock market, people approach it a lot of different ways. But this is fundamentally, if you're new, that you really want to understand when you're investing in the stock market. So the first things first, you want to understand the business. Before you look at anything else, if you don't understand the business, you're not going to know when the company's doing well, when you should be concerned. So it's the first things first. You have to understand the business, because if you're a business owner or if you own the whole business, if you don't understand how it works, it's really difficult for you to overcome challenges and obstacles and things like that. The next thing is, of course, management, because you want to have management that are reliable. So if there's constant management changes and stuff, it's really hard to know where the direction of the business is going. So those understanding the business and management, to me, is really important before you jump into anything like that. Those are the 2 things that you definitely want to understand. A lot of times when you're investing in value stocks, you're investing in a lot more mature companies that has a long track record, because ideally you're trying to be able to forecast or kind of predict where the company can go. So if it's a lot more mature company, it's easier to say, okay, how the business will end up doing. Wherever you have like a startup company or companies that are like in the early stages, or especially the innovative company, it's kind of really hard to say where the company may be as far as the future cash flows and stuff like that. It's kind of heavily based off of forecast, projection, optimism. So with value investing, you want to go with, as far as like your risk tolerance, you want to go off of predictability. So if you can't really predict where the cash flow will be, then it'd be very difficult to know whether a stock is relatively cheap or not. And another thing with value investors, so like I said, it's more so businesses that's kind of easy to understand, and businesses that are more so needed than necessarily wanted. So you're kind of more so focused on business that you can kind of definitely say, okay, this is a safe bet that it will be around for the next 5 or 10 years or 20. It doesn't necessarily matter in that point. But like I said, value investing can be considered boring because it's kind of like a buy and hold. So some of the approaches that you can kind of look at it is If the stock market closed for 5 years, would you still want to hold this particular stock? And a lot of times I want to actually mention this, for value investors, the stock price really doesn't tell you a lot. A lot of times when I tell people about like stocks and stuff, they definitely kind of like throw this out of the window, especially a lot of beginners. Like to me, I only say the stock price doesn't mean anything, because you have to put stuff in perspective. To me, the market cap and outstanding shares would tell me more about the company than the stock price. So let me just put things in perspective. If I said, is $7 good for a pizza, or $7 good for buying a pizza, you need more information. Okay, $7, is it a medium pizza? Is it a large pizza? Is it an extra large pizza? And you just say, well, it's just a pizza. That doesn't tell you anything as far as the value or whether it's a good thing. Most of the time I tell people this, but they kind of throw it right out the window and just kind of focus on the actual stock price. Okay, so let's get into some of the more financials, or a lot of things people kind of look for when they're investing in value stocks. So like I said, you definitely want to understand the business. You definitely want the business to be profitable. You want the business to be profitable for a long time, so you can kind of predict where, or you have a good indication of where the company is going. You definitely want to see companies that are definitely reliable, just like profits and earnings, consistent profits and earnings. It's also good to see that if the company end up paying dividends, so they're paying dividend, they're reinvesting the products or services that they offer that has a promising longevity. You also want to look for a company that has a remote, like what you consider a moat, things that give them a competitive advantage relative to their other competitors and stuff. So these are definitely some of the things you want to end up looking for. Of course, with value investing, you're definitely looking at the financial standings, you're looking at the free cash flow, you're looking at earnings, return on equity, return on assets. These are definitely things you want to look at. You want companies has a strong balance sheet, something that you can be definitely confident with. You typically, depending on the sector, it may be a little different, but you typically want a company that doesn't have a lot of debt. Depending on the sector, that actually may change a bit. You definitely want companies that are producing returns on equity, returns on assets, all of those type of things. So with value investor, the income statement, the balance sheet, and the free cash flow statement tells you a lot about the company, because that particular way, you definitely want a company that's in good financial standing. So these are some of the financial metrics. One of the most popular metric, a lot of times before people even look at, and this is the good thing about the financial metric, so before you even kind of look at the balance sheet, the income statement, and the cash flow, these financial metrics help you kind of quickly assess whether you should do further digging. So one of the most popular ones is the P/E ratio. I actually did a video on it. If you want to pretty much check it out, just check the suggested videos. But the P/E ratio kind of gives you an indication how attractive a company is relative to the earnings. So if the P/E ratio is 1, you can kind of think about it. For every $1 that the company makes, you would get $1 as far as business productivity. So when I say expensive or inexpensive, one quick way, if the P/E ratio is lower, then you consider the company a little cheaper, higher, more expensive relative to the earnings. So that's why you're looking at more established companies when you're looking at the P/E ratio. So, and this is the other thing, you definitely want to put it in context based off of the industry. Certain industries have higher P/E ratios than others, and you definitely want to put things in perspective. So a lot of times when I say the overall market is pricey, this is kind of what I'm talking about, how the business is currently doing, more so in the past, and if you was trying to forecast where it would be, this is normally what I'm talking about. Some of the other things people look for, as far as definitely margin of safety, is the amount of assets the company end up having. So a lot of things you could also look at is the price to sales, the price to books. More so with value investing, or when you're looking for value stocks, you're really putting a lot of attention on earnings. That's kind of really a lot, very important. You look, like I said, you're looking for return on equity. As far as debt to equity ratio, normally value investors like to see that under 1. So especially price to book, you want that to be a lower number. So a lot of these metrics, you want to definitely see a lower number. Definitely a good indicator. Another thing you want to look at, the free cash flow. You definitely want to see free cash flow increasing over time. That's also a good thing. One way that you even value stocks is by the discounted cash flow. So it's pretty much where you kind of project, okay, this is the cash flow. It's been kind of increasing by this amount of time. You kind of forecast it out. You get a market cap, and then you kind of discount it back to what today's value would end up being. So once you get the market cap from where it is, where it would be in 5 years, and you kind of backtrack it there, you take that by outstanding shares, and you would get a share price. So a lot of times when you consider an intrinsic value, that's what value investors are looking at. So they're definitely kind of looking at the company's performance independently of everything else. Of course, then if you want to dig deeper, a lot of times the free cash flow statement is very important. You definitely want to understand the operating costs, gross profit margin, net income. Those are definitely things that you want to look for. How much they're investing, how much they're financing. These are definitely things you want to pay attention to. And also another metric you can definitely pay attention to is the PEG ratio. It pretty much shows the price relative to how the company is projected to grow. Like I said, a lot of times with these financial metrics, the lower the better. But one of the things that you really want to be careful for, and a lot of value investors fall trap to when you're looking at value stocks, if you're just kind of focusing okay, because it has a low PE or ratio, or it's because all these metrics look good on the surface, a lot of times it could be a value trap. So a lot of times things could be cheap for a reason. So just because something is cheap doesn't necessarily mean you want to invest in. It could be an industry that's dying. It could be a company that's have like a slow decline, a spiral decline. So there's really no going forward. It's just kind of going down. Earnings are slowly keep going down and stuff. So right now they have a lot of assets and stuff, but as far as earnings and stuff, and as far as getting a decent profit, whenever you see things definitely slowing down, and just kind of each year slowing down, that's not definitely an indication you want to look for. If the best days are over for a company, those are definitely not things you want to look for. And like I said, if it's kind of like a slow spiral death, or I think the company is pretty much fundamentally changing and it's definitely kind of being obsolete, those are some things that you definitely want to stay away from. But that concludes this video. If you want a lot more comprehensive video, make sure you let me know in the comments below. Also, let me know, do you invest in value stocks? But if you haven't already, make sure you hit the like button, and if you're new, make sure you subscribe to my channel.